Hey everyone, this is Julian from the Binary Lab, and yes, you can see I'm in a new place. Alright, so new house for the next 1-2 years, but I look for another uh, bigger place of my own. I mean, this is like a place that we saw that was fairly decent just to move in. So for convenience of kids going to school, got one thing settled for now. And then, on today's topic, I'm going to be talking about whence to Martingale and whence not to Martingale. So martingaling, it's something that it's one of the so-called evils of trading. Some people say that it simplifies trading. It makes it easier for a lot of people to get a decent result. To a certain extent, that is true. But at the same time, the evil in martingaling is that sometimes it gives people, a sense of overconfidence, a sense of oversimplicity that actually breeds ignorance and leads people to ignore a lot of factors in the markets. Okay, I will be talking about some of these factors later on, and I want to also show you that well, I do martingale sometimes, but there are times that I don't, and I'll tell you exactly when I do, when I don't. Uh, what's going to get you into the pits, and what's probably a little bit better. Okay, so um, I want to show you the various things out there to do with this, and I have my IQ right here. I have my MT4 right here. I'm able to show you some stuff um, based on the markets today. And let's switch off the auto scroll. Let's scroll it back to Asian time. All right, Asian session today was real flat. Actually, it was about, yeah, you can see it. It's super flat. I mean, what are you gonna do with that, right? What are you gonna do with that? So flat is when I mean that there's a lot of dojis, a lot of pin bars, and with that, you can't really do much of it. Okay, so in these situations, I cannot possibly do a breakout because what if it breaks out and snaps right back? You ever had that happen, right? And I mean, if you had that happen to you, comment beneath this video right now. And there's also the times when, let's say, you want to do a reversal, uh, but because the range is so tiny, like I mentioned in the previous video, I think it was one of my free trainings. I talked about the spacing between these markers on MT4, and when it's beneath a certain size and you try to martingale, it's just not going to work because it is just too little movement, and that's going to lead you into situations when the last few seconds you lose the trade, or let's say you go in a little bit late for the trade, and because you're going in a little bit late, you get a really bad entry, and you're not able to win it. And that's all the movement that you may get sometimes. Ever had those situations? Comment beneath this video. Um, now I want to show you like why I martingale today. As you can see, I did martingale today. You can check out my trades right here on the side. And I did that because I was starting super small. Okay, one thing that's very important about martingaling is starting super small. But why exactly? Okay, because I saw that the movement is just too tiny for me to do a reversal or a breakout. That's not anything I could do. All right, trend follow. If I did a trend follow, if I get a, you've probably seen situations when you're trying to trade in the markets, but the candlestick just go like green, red, green, red, green, red, and what are you supposed to do? You can't do anything, right? So if it's green, red, green, red, green, red, the best thing that you can possibly do is that you do know the general trend. If the general trend is going a certain way, let's say up, or let's say down, and if they are alternating, or let's say even if there's no trend, okay, there's sometimes what you might get in the markets is something like, when it just goes totally horizontal, but it is within a range. So let's say it's bouncing with these ranges going up, down, down, up, down, and for this stretch of time, I know that to a greater extent it's actually going up. Why? Because it's above the center Bollinger Band, and at this point in time, it is sideways, but just before the sideways part, it's actually going up. So I know to a great extent of time, the bias is towards the uptrend. And I look at my stochastics, I see it's generally above the curve as well. I mean, above the line. Um, and all these elements let me know that the bias is up. So what I would do in such a situation is that I would actually I would start super small. I would just do like call, call, and if I lose, I martingale it, and I probably win the next one, and reset back to the previous trade, and then I follow and I call, and I lose again. I go in the next trade and I win. Why can I do this safely? Well, I wouldn't say safely, but the probability is higher, and I can do this because to a greater extent, it's all sandwiched within a very tight range. That I know that unless it breaks out, well, if it breaks out, well, okay, fine. I may not follow it. If it breaks out, I just have to rely on precision and do one of my usual RSI trend follow or one of my Bollinger Bands kind of trades that you can find in my recent free training videos as well. So, like, if it breaks out on me, I got to change methods, and hopefully it's not going to break out too late in the series of martingaling. Because if I went in like 1 step, 2 step, 3 step, if I'm going for $1 trades, well, my trade size is going to look something like this. Like if I'm going to go like 1, 2, 6, 18, 54, and when I go up to the 4th step, 5th step, it's still, the 4th step is still very small. I'm less than, it's up to this level. It's still fairly safe for me to progress. But if I go more than that, it gets a little bit risky. And so when at that level, let's say when it hasn't hit the 3 digits, I'm just going to go with precision, make it back on later on when the market comes out. But in the meantime, well, when the movements are so tiny, and I know that there's no news to drive in the markets and there's nothing really going on, I'm just going to keep doing that and milk the markets for profits. So that's how I would do it, and those are the circumstances I do it as well. And if you look at my previous videos, I ever taught a method in my YouTube. I'm not sure if I can find it on the spot, but I think it's something like a hybrid. I think I call it hybrid martingale, or where trend change, martingale with reverse martingale with direction change, something like that. And I will find that video and I'll put it in the link in the video description here so that you can refer to that as well. So I did that today as well. I did first the range bound one, get the majority trend. Sometimes I can even find a rising channel. So let's say if I see a rising channel that is really narrow, okay, and this is just an example, I would just basically, I would do something like this. I would just, try to corner that range. Okay, let's try and do it. Yeah, I think my screen recording is slowing down my computer. I would really love to show it to you, but it's not working out. So not to worry, I'll show you here instead. Okay, let's say if I did this, all right, and I did that, I'll just do another one. This gives me like the channel range, and I can move it so that I know where it is, and I know that again, like 60% of the time it's going to be going up. So I would actually martingale, starting really small. Okay, whenever I lose, and I reset. You notice that I probably also have a moving average set on a very low. This can be an EMA or linear weighted. You can use that. And then when it comes to the other side, I would probably want to hold back. I use a couple of different indicators as well, and you can just see what I'm using over here. This does the job pretty well, and you can give it a shot. And like I said, when things get too heavy, I go with precision. That's when I stop. So when's to martingale, when it's really, really tiny range, but when's not to martingale. So one of the things that is the biggest dread for any trader, okay, whether you're trading for accuracy, whether you're trading for martingale, which is inaccurate, by the way, is that there will be the times that we cannot predict when the market just goes flat. Okay, it could be going up and flat, or in any combination. I can probably easily find you one over here. And heck, I'm just gonna make this full screen. Okay, so let's try and find. It's not going to be too difficult to find. I want to find you Trader's Nightmare scenario. I know there definitely was in the Asian session today, because it happens. It just happens. So okay, this is like sideways. This was Asian. Yeah, this was the Asian session. And then and that's just too tiny to trade. No, wait. There is probably gonna. Oh, there you go. There you go. Okay. So here's the deal. Okay. Supposing if you went in and you were, I know some people do it different ways. Some people like give it 2 minutes. Some give it 60 seconds. Some give it 3 or 5. You know, I'm not here to tell you which is the best time frame to use for martingaling. If you wish to learn more, join the binary lab and ask me over there. I'll tell you more. But as far as I can show you in this video, one of the things I want to point out is that let's say if you were, for instance, you know, taking calls or taking puts or taking, you know, whatever it is, but when you get these dojis, and let's say you got the direction wrong, and then boom, explodes. Um, you know, and let's say you know if it goes over the over the EMA or the weighted moving average, and then it dips back down the next minute, you get confused. Okay, so let's say you change direction, you change back again. Should you stick with this direction? Should you go the other direction? But you know when you see it's flattening out, okay, when it's flattening out, no. When it goes flat like that, okay, this is or flat like this. You see, it's literally no movement. You ever had times when you watch your MT4 charts and then the MT4 timer stop moving, right? If you use like a, I like to use like a B clock modified that gives me the timer, or you can use any countdown timer MT4. When the timer stops moving, it's probably because the no price feed is coming in. That means the price is stagnant. So there will be times like that, and I tell you that those times is the best that you probably just start over from the first trade, okay? Or better yet, just stop, wait for the movements to open up, go to a different method. In fact, yeah, don't even continue, because if there's no movement, you want to find movement elsewhere. Look at this one. This is like disaster. This is like a trader's nightmare. And what can you do with that? It's not going anywhere. And then for all you know, when it goes a certain way, it goes against you. And then how many times are you going to have to go in again and again? Now I want to show you that basically when you are trying to martingale, right, you may think that, you know, oh, by the way, IQ option I think is a really good platform for you to do this kind of strategy if you want to. If IQ option is available for you, go for that. If it's not available for you, if you're in the United States, I have a link for you beneath this video marked as well. I have links for all these brokers for you in the information below. And if you find that I'm giving you nice information, please support me by using these links to open the broker links. And in fact, you can actually also message our you know, my Facebook admin on facebook.com/thebinarylab page. Once again, it's facebook.com/thebinarylab page. Because if you deposit certain amounts, you can actually get free membership with us without paying a single cent. All right, so just your deposit alone qualifies you to learn from the Binary Lab, where it's not just me giving live webinars, but there's a whole bunch of experienced traders that have come in different experience levels and just got better over time. They can give you a good mindset and a good insight of what to do. So what I was saying is that if IQ options best, Marcus Wool is good for people in the United States and Canada as well, because the minimum trade size is like $1. So I mean, that doesn't need an explanation. You really want to be starting at $1 for this. It's safe. Even at my account, like right now, you see 5,600, still starting at $1. Why? Because you don't know. I mean, it adds up. Trust me. Now, if you're in the Europe zone, yeah, you can use IQ option. If you're in Australia, okay, if you're in Australia, you want to use expert option. They accept people in Australia. Yeah, so these are the ones. Basically, my top recommendations: IQ option, expert option. If you're in the United States and Canada, markets will. Okay, so that's gonna give you those nice dollar trades. Now, the next thing I wanna tell you about is that, you may think that $1 is harmless, but you need movement. You need movement. You need to, like, I think market opening hours, the overlap is great. Like the Asian London overlap is great. The London New York overlap is great. But if you're trading a single market, okay, I mean, after lunch US is also great as well. But if you're trading just a single market, or let's say if it's a public holiday, so example, we could be doing Asian, all right. But if where London and Europe starts, and it happens to be public holiday in one of these markets, let's say London and Europe's public holiday, then that's just down to 1. It's just down to one market, and then you cannot trade that because the movement is going to be down. I mean, you can, just different methods. Um, Now, I want to show you that it adds up. Okay, so just check this out. I written some numbers over here, and this is what like that's what I do. Okay, 1, 2, 6, 18, 54, 180, 405, 1134. This is pretty aggressive. This is a 7. This is a 7-step. Yeah, not kind of first rate. It's a 7-step Martingale. Pretty aggressive. I've never got to these ones yet. I've gone into here, and well, yeah. I mean, it may just be a small amount of the account, but it adds up. So you do need a substantial amount. I say like 5K, 10K, and then you want to be doing this. You may think that hey, your account's at 5K. Why don't you start at 10? It adds up. Okay, so you never know. What if you run into a series of dojis? Sometimes you run into a series of dojis, and you want to trade it through, and it could get messy. If you want, because sometimes you just don't feel like baiting, although you should. We always need to give ourselves some leeway because being human, we have a human nature, and we do stupid stuff at times. Okay, so just want to advise you on this part. Now, so I've mentioned like when's to, when's not to. Another when's to is, let's say if I'm doing reversal trading. If I'm doing reversal trading or breakout trading, sometimes you think it's going to change direction, but sometimes let's say if I thought that at this point maybe it's going to go up, right? But it went further down. I may re-enter this one for a bigger amount than this original trade. And let's say if I'm doing a reversal, or let's say if I'm doing a trend follow, when it comes back up instead of going down, the next one I may double up, because it's like waves. The stronger the movements, it does build up and accumulate a momentum. And let's say if it goes super steep and steeper, what goes up will come down. And the reason why that happens is because there will be people doing profit taking. Okay, people in the forex markets doing profit taking. That's when it has a small retrace. How long is that retrace going to be? Well, we don't know. It can be if the retrace happens very fast. Sometimes our expiry may be too long, and then we don't get the exit. And if the movement came back, let's say you got a 23.6 or 48.2% retrace. I'm going to show you, like right here, we have a 23.6. Sorry about the colors. 38.2. Sometimes you get that, and it goes further up again, and you may not get an opportunity to exit the trade again. So if you have the retrace already happened, and then alright, just gonna wrap this video up real soon. If the retrace already happened, you missed it. That's too bad. And then you got to abandon that trade. So that's too bad. But let's say for me, if I do a trend, if I generally do a normal kind of reversal trade, I see that it's more likely to happen, then I will go in again. Now I want to read you something that I've written. I want to close with this. Okay. Sometimes good market conditions make us spoiled like spoiled kids, and it makes us expect to earn a certain amount each time, and in the same way. The truth is that it's more like crossing the road. No matter what, you want to take precautions to look left and right, okay? Because there are some idiots that sometimes drive against the direction of traffic. And if things get too heavy, don't be lazy and walking to the next overpass, like taking a break, waiting for the movements in the market to pick up, and come back into a different session. All right, so these are the ways to handle it. And now I want to tell you about one more thing about martingaling as well, because a lot of people think that it's like an idiot-proof way. As long as you have a big account with unlimited balance, you can do anything. Well, you're wrong. The market doesn't have a memory, and neither does the roulette table. Or rather, you think that the market may be different from the roulette table because the previous candle, it has some form of reference, but it doesn't happen. It doesn't always happen that way. It can go flat. It can go further against you. So it's just a probability. It's still eventually just a probability. It's not a certainty. All right. And then sometimes, if you make a loss, all right, you want to reflect the loss. If you don't reflect, the loss is just a loss. And if you reflect, you make new notes, you experiment new things, and you can turn your setback into your weapon. And this is how I found precision trading. That's why I teach in the binary lab. So if you're not already in binary lab, just join us right now. I actually don't use martingale on my webinars almost at all, and I go by precision. I learned about precision through many errors in the past, blown accounts using martingale, and sometimes the simplicity of strategy makes it too tempting to execute. The only thing is you never know when the market's going to bail on you. Okay, so these are the things I want to leave you with. I hope you find this video useful to you, and leave me your comments down beneath this video, share it, and give me your comments on what aspects you made. If I asked you for cues just now, comment below. Alright, I'm going to head out for now. It's getting dark, and I'll see you in the next video. Bye for now.